Welcome to the Weekly Juice Podcast, where we discuss all things real estate, personal finance, investing, entrepreneurship, and the many ways to achieve financial independence. We interview accomplished investors and entrepreneurs with the goal that their stories inspire you to take control of your financial future. Here to get your creative juices flowing while also documenting their own personal investing journeys are your hosts, Corey Jacobson and Ryan Bevilacqua.
Welcome back to the Weekly Juice. As always, it's your boys Ryan and Corey here with another episode. Today we had an interview with Devin Burr. He's known as Mr. Burr on TikTok, Instagram, all social media. First of all, he barely graduated high school. Then he moved into mortgages and worked for Quicken Loans for multiple years, writing mortgages. And then he became a real estate investor, decided to leave his W-2 job at Quicken Loans to bet on himself and become a full-time real estate investor. He did wholesaling, he did flips. And then from there, he stumbled across the concept of infinite banking. And now he's in life insurance, teaching people how to overfund life insurance policies to essentially become their own bank and start funding other deals, buying small businesses. But this was a very insightful episode of how to park your money in different places or utilize different vehicles than you've traditionally heard of, like 401ks, Roth IRAs, and how to use a new system to buy yourself assets, which is very, very cool, interesting, something I personally do, and I just love the concept.
Yeah, this is a kind of a case study-ish episode because Rye does exactly what Devin kind of teaches people to do, and I don't do infinite banking, but after listening to this episode, I'm kind of questioning why I don't do infinite banking. I think you really just need to listen to this episode all the way through because you'll find it just so awesome the way that Devin left his job. He was like, I have this 200K wholesale deal coming in. I make 200K a year. I'm just going to quit my job. And I don't even know if that deal actually came through the way that he thought it was, but he bet on it. Didn't, right?
No.
He bet on himself just kind of on a whim, but just as with this belief system that he knows that he can do it. And then he became Mr. Burr, right? So he started buying properties, fixing them up, rehabbing, and then found this new strategy with infinite banking. Now he's lending money out and just skyrocketed his net worth. He was saying he made 100K a month very quickly into this and now makes significantly more than that. So his goal is to be a billionaire. It's like, just talking to people like this that have, you can't do conventional things in life and expect to live an unconventional life. And we talk about that in the episode. Like, so if you're listening to this, you're like, it sounds like that's not for me. It may not be for you. We're not suggesting that it is, but the point is that if Devin's doing it and it's working for him, maybe there's a new way to think outside the box. Maybe there's a new strategy that you haven't heard of. And for me, even, I was like, no, I don't want to get shiny object syndrome with everything you hear, but watching and listening and learning from Devin, it really brought like a whole new mindset shift to me. And he's 38. So he's been doing this for a while. But for somebody that barely graduated high school to be where he is right now, it's just truly inspirational.
And the reason he wants to become a billionaire is to change the education system. And he talked about he wants to improve the lives of not only his daughters, but all the other kids around the world that aren't taught how to read a P&L, how to do their taxes, how finances work, just a lot of different things, which is commendable. He's been able to buy the cars, been able to buy the houses. And he's like, dude, what am I doing this whole thing for? Like, so when I pass away, I just pass down this cash to my family. Like I'd rather impact the entire world. So commendable guy and very interesting episode. This is one of my favorites to date. And I think without any further ado, we should bring in Devin. Let's do it.
For real estate investors, going mobile is the next big thing for managing our properties. We like to have the power and resources in the palm of our hand. When we're hunting for deals, we're consistently go, go, go. Having RentReady's property management app is great for checking in on all our properties, especially when it's time to collect rent. With RentReady, we get the benefit of both mobile and web apps that allow us to collect rent from anywhere. We not only get instant notifications when rent is paid, but we also have the ability to send automatic reminders to tenants when rent is due or late. From finding the perfect tenant to collecting rent, everything an investor needs to build wealth and manage their investing portfolio can now be found under one roof with RentReady. The most exciting news is that RentReady gave us an exclusive 50% off promo code that can now be used by all of our Weekly Juice listeners. You just need to visit rentready.com and enter the code JUICEPOD to get 50% off any RentReady plan. That is RentReady.com and enter the code JUICEPOD, JUICEPOD, to receive 50% off any RentReady plan.
Devin, officially welcome to the show. Corey and I are so excited to have you on here, man. So thank you so much for joining us tonight.
Appreciate you guys having me. Thank you so much. Looking forward to serving your community, seeing how we can drop some bombs and get some value.
Let's do it. So if you could, start us out with way back, what you did before getting into real estate investing and what your profession was essentially, and then how you transitioned into real estate and then eventually to the insurance kind of world where you're at now.
Yeah, so I started off doing mortgages. I was a loan officer, started way back in 2005, and I was going to college and working as a loan officer at the same time. I was going to college to be like a business major, and I made my first commission check that was like 10 grand in a month. And I'm like, why am I going to college? This is stupid. So I dropped out at ASU and just started slinging loans full time. Did that all the way till 2019. For a lot of companies, like I could not hold a job down. I'm like the worst employee ever. So don't like being told what to do, basically. So I figured in 2019, I wanted to become my own boss. So I walked into my job at Quicken Loans at the time, and I resigned and just went out on a limb and did real estate full time, wholesaling, flipping houses. And from my first deal, I think I closed on was January 13th of 2020. And I did like 8 of them from then until March. And then the pandemic hit. From there, everything really changed. But that was kind of the start of everything.
Devin, this is interesting. Did you have any like proof that you could do this, or was it more so like this just belief in yourself that I'm like, well, no, I can take this on? Because we were talking pre-show and we were saying that Ryan and I are doing all these things. You know, we have ownership in certain companies. We're still doing our W-2 job. We're running the podcast, and that W-2 job takes up a lot of our time. I think that we could leave, but my question for you is like, what gave you the realization that you could? Was it just an ultimate belief, or how did that come to be?
It was almost by accident, but looking back on it, there was a lesson in there. So basically I started looking to find real estate deals. I want to say like mid-September of 2019. And I was looking for deals. I was sending out flyers and just trying to drum up leads while I was working full-time at Quicken. And I ran into the same thing you guys are probably running into, where you're working your job, and then by the time your job's over and then your side hustle is taking over, you're kind of exhausted. You really don't have like the mental fortitude to keep doing it. So you put it off for the next day. So this happened for about 2-3 weeks at Quicken, and I locked up a contract in Chicago. I'm in Phoenix. I locked up a contract in Chicago on a 6-unit property for $19,000. I thought I was going to make like 200 grand wholesaling this property, but little did I know it was in this little pocket in Chicago where you legitimately needed a bulletproof vest. It was rough. So I locked the deal up October 7th of 2019. I walk into my job October 8th and I quit because I'm thinking I'm going to make all this money on one deal. Why work here anymore? So I wouldn't suggest people do that, but in retrospect, because I did that, I jumped and like grew my wings on the way down instead of like over calculating and like really needing everything to be perfect. I think a lot of times people keep jobs because they want the security, right? It's secure. You know what's going to happen. But think about this. What do they call prison? Maximum security, right? So the more security you have, the less freedom you have. And it's so true, because with a job, you have security, but you don't have freedom. It's golden handcuffs. So I think once you make enough money on like a side hustle to where you'll be all right if you kind of fall flat on your face for a little bit, I think most people just need to take that leap. And like I said, grow their wings on the way down.
Do you think there was something about your past or like the way you grew up that gave you that mindset? Because I think you seem like the type of person that fits that prototype really well. Like it just works for you. I think a lot of people would have trouble with it. I'm wondering, just to give people more context, do you think it's something that happened as you were raised or anything that gave you it really is a belief in yourself, even if you're not saying it? It's definitely what it is, right? You have this belief that you can do it. I think Ryan and I are similar in a sense, although we haven't left our jobs yet, but I feel like we believe we can do whatever we put our mind to. I don't know if I could pinpoint where that started. I had a great upbringing, but I'm curious if you have anything that maybe springboarded you into that mindset.
Yeah. When I was really young, I think probably third grade, what's third grade like?
I think you're like 8 or 9. Yeah.
So at my elementary school, they'd have bake sales, and every bake sale they would sell out on these caramel apple lollipops. Like it'd be the first thing to sell out. So I saw like a need right there at 8 years old. I'm like, well, those are selling out. Everyone wants more of them. How about I just buy them with my dad's Costco membership, bring them to school, and just sell them? So I bought big bags at Costco for like, I don't know, $5, however much they were. And I'd sell each sucker for 50 cents. So at 8 years old, I was bringing home like a few $100s in profit. So that from a young age kind of let me know I could create money if I wanted to by just solving a problem. The problem was they didn't have enough at the bake sales, right? So, okay, I'll just bring more and sell them just like they're doing. So I think that's probably where it came from. And then I've always been a believer that if someone's done it, it's possible, to an extent. Like if someone's dunked a basketball, it doesn't mean I can do it. I'm only 5'6", you know what I mean? But
Sure.
To an extent, like I've got 2 eyes, 2 arms, 2 ears. I've got a brain. Like if someone that has those same attributes has accomplished something, who's to say I can't do it as well?
That's good mindset. Yeah. I think it's funny at 8 years old, you had that concept. I think it's interesting. People will probably come back and be like, well, you don't really have any concept of money or how the world worked at 8, but you saw a need and you provided value, right? And you saw a profit. Maybe you bought your toys or whatever you were spending money on at that point. But I think it's awesome. And I look at it as like, we played sports all growing up. It's a game, right? And for us, like we're getting up and going to work every day. It's literally a game. You're going chasing dollars and for whatever your why is, right? To do what you want to do, travel, family, everyone's got their own why. But for us, it's like, we want to be spending the time that we're spending doing what we want, versus, searching for the dollar isn't always, the right reason to be doing something, for example. So I know we talked a lot about security and all that. It's interesting. Did you have and the reason I'm asking this, it's like kind of a two-parter. One is like, was there a dollar amount that you had saved up where you were confident enough to say, okay, I can last for 6 months if I do fall flat on my face? Or was it, hey, this deal was just so like, you were like, dude, I'm making 200K, like whatever, let's just try it. And because I think go ahead. Yeah, I'll let you take it off.
It really just was the deal, 200K. Like I was making about that per year working at Quicken. So, and that was paying the most amount of taxes because it's earned income. With the wholesale deal, I would have paid capital gains. So I had a somewhat of an understanding between the difference in that stuff. So I knew like, all right, I'm going to make 200 grand in one shot and I'm going to pay less taxes. How about I spend all my time finding more deals? I'll make way more than 200 grand if I do that. So I just had this belief, like I found this one deal. It took me, let's call it 2-3 weeks. I'm not even really putting all my attention on it because I'm working this job full time. If I can put all my attention on this and give it all my energy, I'm going to make a freaking ton of money. I just believed that I could do it. And I knew some people in the industry and I looked at them. They weren't any better than me. So if they could do it, why couldn't I? So
yeah, I like that. So it's interesting. You mentioned 2 arms, got a brain, you're human, like blood running through you, just like all us. We all have the same things going on. And obviously like upbringing and a lot of other cultural things are different. However, the reason I bring this up is how I wanted to frame around people. Like we tend to bring a lot of real estate investors on the show, or small business owners and people that have purchased small businesses. But for you, why real estate? Was it because 90% of millionaires become so through real estate, or was it through learning the trade, if you will, or the profession through mortgages? And you were just like, hey, I already have this knowledge and background in it. Let me just keep pushing forward, because for us, we're not in real estate on our W-2s. And we just decided it because what is the most common thing that everyone else has done? We think we can do it better than some other people.
Yeah. For me, man, real estate was just, it seemed sexy. You know, like you see HGTV, Flip or Flop. Like me and my wife would watch that show all the time. And I'd be like, that looks so easy. Like you just buy a property, you just make it look good. That's easy, right? So I just thought it'd be sexy to do it. And once I started actually doing flips, it fucking sucks. Hopefully I can curse, but it sucks. Like, I hate flips. Let's just put it that way. You always get surprises. You never make as much money as you thought you were going to make. So I think I just thought it would be like something fun. And once I got into it, I realized it's not all it's cracked out to be, but it's a great way to make transactional money and grow wealth. And for most people, it's not the end all be all. It's just a stepping stone to get into other things.
Well, let's talk about those other things then, because behind you, if anybody's watching this on YouTube, you can see it says Mr. Burr, and your last name is Burr, which is, I was like cracking up before the episode started. I'm like, it couldn't be more perfect. It's not spelled the exact same way because there's no vowels in BRRRR, but I'm wondering, you don't like flips, but part of the Burr process is flipping. So what was your strategy once you got into real estate? I know you were mentioning you were doing wholesaling and flipping. Did you eventually start buying rentals? Give us the first couple years, as it was only 3, 4, coming up on 5 years ago where you were jumping in. Like, what did you do? How did you build this foundation for yourself?
Yeah, so what I did is wholesaling and flips starting out. And I realized, like, I'm paying less taxes than when I was working W-2, right? I was making earned income then. Now I'm paying capital gains. And I just hate taxes. I freaking hate them. I think it's the biggest, like, it's basically robbing from somebody, right? You're taking money out of my pockets and then just distributing it to other people.
It's rough. It's rough.
I mean, dude,
I think there's a time and place for it, but if you want to get into that conversation, it's just, we just met with our CPA a couple weeks ago and realized that we had to pay taxes on an insurance payout on a property that burned down that we had no control over, but we still have to pay because I'm like, what is going on here? Like, why? Because we have to pay capital gains on a property that burned down. I could go on for hours, but yes, it's as you start to make more money, your mindset changes on like, wait, what's actually going on here? And I think, what you work, depending upon what you do, you work 4 or 5 months for the government. It's like, Jesus, man.
Most people have an income problem. They just need to make more money. But then once you get to that, you've got a tax problem. You can only write so much stuff off, right? So I got to a point where I was like, all right, I'm making some pretty good money, but I'm paying so much in taxes still. How do I pay less? And I knew about this method of real estate, the BRRRR method: buy, renovate, rent, refinance, repeat. And when you hold on to properties, you pay less taxes because you have depreciation. It's not earned income, so you pay way less taxes. So I'm thinking, my last name is Burr, B-U-R-R. There's this BRRRR method. How about I just be Mr. Burr, because I am Mr. Burr? And I just started coining myself as that. I made a music video, which was the stupidest thing ever. It was me rapping. I'll send it to you guys, but it's basically a spoof video of a Chingy song from back in the day. It was Right There.
Mr. Burr. I love it.
Like, I like it when you send me a burr. I'll do a fix and flip. Yeah, sure. Like,
I hate that, dude.
No, that's good. That's catchy. Yeah, Jill.
There's actually a realtor in Florida that, like, he's killing it now. I've seen his social media blow up. He literally raps to find clients and people that like rapping about real estate. I was like, dude, this is kind of corny, but it works. He's everywhere now. It's insane. So I think
from that video, I got so many deals sent to me because it was like, I like it when you send me a burr. And then like these agents and these these wholesalers, they were like, dude, love your video. I think this will be a good BRRRR. They just send me a deal. And I'm like, yeah. So then I would buy that property. And so I started holding on to rentals. And as the market went up and I had all this equity, I'm like, all right, let me take some cream off the top, take this equity and start doing some bigger things with it. So, yeah, a lot of it's just luck, the timing of when I got into the market and how it appreciated. And then stumbling upon infinite banking really helped because I was able to start multiplying my money through policies.
Let's talk about that. I kind of want to just, before we get to infinite banking, because I know a lot of the episode's going to be on that, I do want to talk about some of the BRRRR's strategy that you use. Like maybe if you can give us a deal. I know that now in 2023, the interest rate situation makes it a lot more difficult to BRRRR. There's more uncertainty. And I say that in air quotes for people that are watching because there's always uncertainty. Nobody knows what's going to happen. So, people are talking about uncertainty. That doesn't mean that it's not always there, right? So, but I'm saying to BRRRR, a 3% interest rate is very different than a 7.5% as an investor, right? So can you just maybe give us a deal of one that you did back then, how that was able to springboard into the next one, and then we will get into infinite banking. I just want to hear this.
Yeah, so I saw a problem with the BRRRR method, which was the refinance part, because I came from that world of refinancing. With refinancing, you have to have seasoning in the loan when you're doing cash out, which is what the BRRRR method is. So let's say that seasoning is 12 months. You got to keep that property or that loan for 12 months before you can do a cash out refi. If I'm on like a hard money loan at like 15, 18%, and I finish all of the renovation in 3 months, and I got to keep paying for 9 months on that high interest debt, that's not good. So I saw that hole in there, and we kind of switched things up a little bit where instead of refinancing, my LLC owned the property. I would sell it to my wife. So it wouldn't be a refinance, it'd be a purchase. She has a W-2 job, so she could easily qualify. She's very bankable, good credit, high W-2 income, and I would just sell it to her. The benefit behind that is with a purchase, the appraisal generally comes in right around the purchase price. So we can kind of dictate what we needed the purchase price to be in order to get all of our money back out, instead of it being a refi and that appraisal is just a crapshoot. So it worked well, man. We never trapped money in deals. I would just sell it to her. She'd bring a down payment that would go to the lender, and then all the proceeds would come to my LLC. I would just pay her back the down payment and then get all of my money back out of the deal. And now we've got a property for zero money trapped, and we've created 20% equity with her down payment.
I don't think I've ever heard of that before. Is there any conflict of interest or like red tape or anything where you sell to were you not married at the time, or does it not matter? Like, is there anything that I'm missing there? Or is that like completely, I'm not suggesting it's illegal, or I assume you wouldn't be talking about it, but I'm just like, I've never even thought of that. Awesome.
No, doesn't matter. If she was part of the LLC, then it would, but the LLC is a separate entity.
Yep.
So the LLC is not me. It's its own entity. If she was part of it, she couldn't sell to herself, right? But the LLC can easily sell to her.
Makes perfect sense. Okay. What is your portfolio comprised of now as we're recording this in 2023? I know you built a lot of it in 2019, 2020, 2021, et cetera. What's it look like now, and what are you focused on?
So we're actually liquidating most of the properties. I don't want to deal with real estate anymore, at least on the residential side. I was doing a lot of Airbnbs over the last couple of years, and that's a hospitality business. You've got to be on the ball, and I don't want to hire someone and give up like 20, 30% of the rents. So I would just manage everything, and it's just headache after headache, and people are prima donnas and they want everything, and it became more hassle than anything. So selling off all of our rentals, we have 2 left. So now what I'm doing is, instead of actively investing into real estate and having passive income, because it's not really passive, I had to manage the properties. I'm actually getting passive income by lending the money. So I'm just becoming a private lender I go into private equity deals. I lend money to different investors, and I just get interest back to me each month.
Got it. So you've used your skill set to build up a pool of equity, and the pool is the investment properties that you've owned. You built that up to a point, let it appreciate. In 2019 to 2023 has seen incredible appreciation. You've built that up, liquidated it, and now using that, when you have enough liquid, you can then lend out at 7, 8, 9, 10, 11, 12% or whatever the number is, but it's so much more income that's coming back to you on $1 million, $2 million, whatever it is, versus having, to get $300 a month in cash flow on a rental property, right? So that seems like a pretty cool, and I appreciate that you said luck was involved, because there's not a lot we can control with like the appreciation in the market, but you did see a need and you went after it, and I think that's commendable. So that's awesome. And I know you wanted to talk about infinite banking, because that kind of brings us to the next stage of the story.
Yeah, I mean, you've already made yourself your own bank through the BRRRR method, right? That little trick you did selling to your wife. That's amazing. I love we haven't heard anything like that yet. So
yeah, that's an Instagrammable clip right there for sure.
Yeah. I mean, there's so many ways to get creative in this game. That's why I think it's so important. But I love the infinite banking strategy. It's in a couple of books I read, and I came across it similar to you. You've obviously built a business around it. So for people that don't know what it is, can you take us through infinite banking and then talk us through that stage of your life?
Yeah, so I came across infinite banking during the pandemic. I just heard it on a podcast. Like everyone else, I was stuck in my house. So I was just trying to become better. I was reading a lot. I was watching a lot of YouTube videos, trying to learn stuff. And I heard this podcast. This guy was talking about becoming the bank and all these different things you could do. And I was like, that makes so much sense. So I started just obsessing over it. I started reading books like you have. I started, reading articles online, watching videos on it. And I'm like, I just need to do it. So I got a policy. I started using policies for my real estate and noticed that I could just multiply the money by just simply putting it in the policy first. And to explain what infinite banking is, it's basically just storing your money and flowing your money to a way better place than what all of us know where to put our money. Think about this. When you guys get paid, where does your money go?
Checking account, bank account.
Well, that's what everyone's taught. Goes to the bank account. And then as you have it in the bank account, you use it, right? As you have more, you save it in the bank, right?
Yep.
Infinite banking is a better place because it's protected against lawsuits and judgments. Banks aren't. Banks fold all the time. Insurance companies don't. You get guaranteed compound interest that's tax-free. You don't get that in bank accounts. It grows at 3.25% or higher, guaranteed 3.25%. Your bank account's like 0.06. So it's way more, and it's tax-free. It gives a death benefit. Bank accounts don't. It's just a better place for your money to be flowing and stored. Here's really the coolest part. All those things I just said are true. It's a better place to put money and store it. However, when you use that money, you still get all those benefits. The compound interest is not interrupted. You still have a death benefit. It's still protected against lawsuits and judgments. It still grows tax-free. If you use money in your bank account, you don't earn any interest anymore, right? So I learned that if I put all this money in this policy, it's guaranteed to keep going up. So then what I can do is I can just use it and make money over here as well. So I'm making money in two places at the exact same time.
So take us through for starters. I know we just got into infinite bank, but it's essentially overfunding whole life insurance policies, correct? Can you take us through life insurance and then whole and term, and then just put a bow on it and how it all ties together?
Love it. All right. So there's two kinds of policies. There's term insurance and then there's permanent insurance. Term insurance is you're just renting a policy. Think of it like that. You have term for 10 years, 15, 20. You only get a death benefit, or I should say your family, because you die, you don't get a death benefit, your family would, if you pass away during that term. So let's say it's 10 years, I'm 38. If I live to be 49, All that money I sent to the insurance company is gone. My family doesn't get anything. So it's just renting a death benefit. That's it. That is the most profitable policy for the insurance companies. That's why you see it always pushed. Term, by term, because it only pays out 1% of the time. Most people outlive the term. So that's term insurance. And there's permanent insurance, which means your family gets a death benefit your entire life. Doesn't matter when you pass away. Could be the next day, or it could be when you're 110. It's just, there's always a death benefit. So those are the two policies. Regular permanent insurance, whole life, is probably the worst place you could put money because it doesn't create any cash value quickly. It takes a long time to build up like a cash account that you can use, and it's really expensive. So a lot of people think of it as like the worst place to put money, which I think it is, but what I do is overfund whole life insurance. So think of it like this. If you guys were going to put in $10,000 a year into a policy, regular whole life, $10,000 a year, you're not creating any cash value, and the agent is making a ton of commission. What I would do is take $10,000 a year and lower the base premium, which is what pays for the death benefit. So basically a lower death benefit, so there's less fees, less cost, and then you overfund it to 10 grand. So that all that overfunding is just immediate cash value. You can use it for whatever you want, no questions asked, but it's in the contract. So again, it gives you protection against lawsuits, guaranteed to grow tax-free, everything I mentioned.
So with that, let's talk about utilizing that, because there's a couple ways. So say I have these policies put together and I save up 100 grand, right? However long it takes by overfunding. I want access to that to deploy into real estate. Can you take us through exactly how that works and talk about the payback on, like, am I going to owe the insurance company the interest, or am I going to pay myself? How does all that work?
Great question. So so as soon as you have cash value, which again, the policies we do are immediate. You put money in, and a large amount of what you put in is immediate cash value. So if you need to use that, you just log on to the website, you have a username and a password, and you just go to where it says policy loan, click that, put in how much you want. A couple of days later, you got the money in your bank account. That easy. Now, as far as like, let's say you took a policy loan for $10,000. You never have to pay it back. That's the crazy part. Because there's two things that the insurance company guarantees. They guarantee they'll pay you 3.25%, guaranteed. And they guarantee you they'll pay you a death benefit when you pass away. What that means is you just borrow from the death benefit. So if you got $10,000 in cash value, you're getting a loan from your future death benefit. You're going to die at some point. So if you never pay it back, they'll just lower your death benefit. So you have total control. You pay it back if you want to or if you don't.
So talk about also the non-breaking of the compounding. So let's take 100 grand, for example, right? So I have a bunch of policies. Let's just say, this is hypothetical, not real life. Death benefits close to $1 million, and I have 100 grand saved up in cash value, right, from overfunding these. I have a property that I found with Corey, and we're like, dude, we need 100 grand to put down on this thing. Corey doesn't have the cash. I do. I want to bring it. I can go in, log into my account, take out the 100 grand. Now, put it down, down payment on the property. Cool. We're good to go. Now, you're mentioning I don't ever have to pay it back. So do my monthly payments change? Like, am I going to continue to pay, like, overfunding that amount that I had put in to stack up to the 100? And does that 100 grand, by me withdrawing it, stop the compounding effect? Like, am I starting back at zero at the cash value at that point?
No, because remember, you're not actually removing that money. You're borrowing against it. So think of it like a house. If you have an equity line in your house, you can borrow from the equity of the house, right? That's not going to lower the value of the house, right? So
Got it.
Same thing. You've got equity in the policy. The money you're putting in is the collateral to get a loan from your future death benefit. That's it.
Got it. So in that scenario, Devin, would that mean, and I'm just trying to follow along here, would that mean that if you did borrow that $100,000, the death benefit would then, if you didn't pay it back, would pay $900,000 in Rye's scenario, as opposed to $1 million? That's where it would come off when you die.
Exactly. So in my opinion, it doesn't really make sense to pay back policy loans if you can use the money to go make more. Because think about it. Let's say I've got $30 million in death benefit, which is about what I have. So $30 million bucks. And let's say I've used all my cash value. Let's call it $10 million bucks. Hypothetically, and I pass away. And I use all that 10 million to go buy assets that are going to make more money, right? When I pass away and I don't pay any of the 10 million back, my wife would get the difference, 30 million minus 10. So she'd get $20 million tax-free as a death benefit, right?
Yep.
He's also going to get everything I bought with the 10 million.
100%. Then
It's just access to all the equity that you have in the assets, is what you're saying.
Yeah, and it's funny. People are like, you guys are talking about death and all. This is seems like a very long-term play. My thought is you can buy, if you buy overfunding this and you stack it over time, by buying assets, like let's call it a rental property, Airbnb, whatever you want to call it. If it's bringing you cash flow, you're double dipping and you're just creating another income stream for yourself. And truly the ability to keep the compounding going up. So that $100,000 keeps going up that 3%, right? Plus, and you can keep overfunding that. But you don't have to pay yourself back on the back end. That's unbelievable because you're just stacking up your assets on the outside world, right? Outside of the life insurance at the same time. So, I mean, that's the power of leverage, right? Like you could buy for $100,000, 20% down on, that's a pretty
$500,000 home, right?
It's pretty incredible.
That $5,000 home, if that compounds at 3% a year or whatever it is based on appreciation, then, at 10% a year, that's $50,000. At 3% a year, that's, you're making an extra $15,000 or something like that. Each year that compounds. So the appreciation of the home is essentially covering more than you would owe back eventually on that cash value.
Right. And most people just don't understand the power of compound interest because it's not something that happens overnight. It takes a while. But the longer you give it, like compound interest kind of does this, and then boom, it shoots up. So perfect example is I'm in my 4th year of funding policies. I funded a policy, it was my second policy, $125,000 a year. I put in 125 the first year I had access to 109. So I put in 125, I can use cash value immediately of 109. 125 is going to keep compounding. So I take 109 and I go make more money with it. And I keep doing that every year. This year I funded that same policy, 125. I can immediately use 140 because it just keeps compounding. So think about it like a house. Again, if I have an equity line on this house that I'm in, if my house value is guaranteed to keep going up, I'm going to be able to always borrow more from my equity line. It's the same thing with a policy. If it's guaranteed to do one thing and one thing only, which is go up, I'm always going to be able to use more. And I never had to pay it back.
So interesting. I think my brain is wrapped around it the wrong way. And it's funny because I did a lot of research on this. I didn't realize the cash value never stops accruing. And like, for example, if I had the $100,000 saving there, I thought when I took the hundo out that I was started back at zero. And I had to go, okay, 5 years later, got to stack it back up. So it's very interesting that you can do that. And I guess it just depends on how much you fund it for I guess it has to be vested in there for a certain period of time and before you can pull it out, or no?
As soon as you put it away. If it's structured the way I structured it, if it's regular whole life, you can't use anything for years. If it's structured the way we do it, it's within a couple of days.
Very cool. Now, talk to me about this, and this might be just a sidebar question, but is there a way, and I thought there was a way, for people to buy term insurance and convert that to whole life? Is that a play?
Yeah.
Can you talk through that example? Because, I know there's a lot of people out there that maybe are at a different stage of life, and term may be appropriate for them, depending on if they're a little bit older. I don't know. Maybe give a scenario on how term converts over. I kind of forget how that works.
Yeah, so term insurance can be converted if it's convertible. So you just have to find out and make sure that the insurance is convertible. If it is, then you can do what's called a 1035 exchange, kind of like a 1030.
Wow.
Real estate.
Yeah, that's cool.
So it's the same kind of thing. You're exchanging one insurance policy for another with no taxation.
Got it.
So,
Second.
yeah, so you can do that all day long. I actually did that on 2 policies of my own recently, and just so I could get them into a better policy, which is an overfunded whole life.
Very cool. So 2 things here. One, I'm a huge advocate for this. I use this strategy, and my cash value is still accruing, right? I'm waiting till I get to a certain dollar amount before I start playing the game. It has to accrue for real estate. It's got to be pretty substantial to be able to use it for a down payment. But there's such a comfort in having knowing your family's taken care of if anything happens to you. I know that's not like we're talking about this as strategic to buy assets and wealth, but that underlying feeling like every day, like even if my W-2 stripped away, you know what I mean? Or whatever happens, like I'm okay if I get knocked out of the world. My family is. So for me, that it just gave me a new sense of confidence and ability to take risk. So I think those for people out there, it's like if you are looking for something to just give you that backbone, I recommend it. I love it. But Devin, I'm wondering if you can give us an example of something in your portfolio or an example deal where you've used your cash value and just take us through the process of buying the deal and like what equity multiple you came out with, maybe one of your best deals that has been used through insurance, or maybe some, an anonymous client of yours that you might know about. Because for people that are listening to this, they're probably like, oh my God, you guys are talking about so many different terms. They might be driving. How can I like conceptualize a deal?
All right. So one thing I want to touch on first, because I have a deal that will blow you guys' mind. But first thing is what you just hit on, which is the death benefit.
Yes.
Like we do not structure policies for the death benefit. Like I told you guys, we lower the death benefit and overfund it. So at the end of the day, though, we are guaranteed to pass away, every last one of us. We just don't know when. Right? When it happens, your family gets a death benefit. So like I can sleep at night knowing that my wife, if I pass away right now, is going to get $30 million tax-free. Hopefully she can make that stretch.
Hopefully you wake up tomorrow, dude. Does she know that number? Just kidding. That's good.
The crazy thing about these policies also, guys, is the death benefit increases. So I'm probably not going to die anytime soon. Statistically, I'm only 38 years old. Right. Knock on wood. Right. But when I'm likely to die, that's probably 70, 80 years old, something like that. My death benefit at that time, if I get no more policies, which I plan on buying a lot more, it's upwards of like $200 million. That's the power of compound interest when it's not interrupted. So again, it's not about the death benefit. However, when I'm likely to pass away, my death benefits are around $200 million. Crazy.
So it's insane. And I want to keep the deal in the back of our heads. Let's not forget to talk about that. But all right, so we talked about a lot of different terms, policies, just concepts overall. And I think for people, and for example, Corey specifically wants to become more educated on this, right? To see if it might be a benefit to him. Can you talk to, like, I feel like there needs to be someone to help puppeteer this whole thing and like guide the lanes. You talk about you writing some policies. I have a financial planner. We go through this and he takes me through step by step on certain policies, adding new ones. So people shouldn't just go out there and go to a random person and say, hey, I want to overfund life insurance. How do you recommend them finding almost like a strategic coach or someone that can write it appropriately, similar to you, or maybe it is you, on like how to run the show the right way?
Great question. So, man, like these policies, they're great. If they're structured properly, it's like the best policy you can have. However, if you don't know how to use it, it's kind of like if you were trying to golf and you got these brand new golf clubs, the best golf clubs you could get, but you have no idea how to swing.
That's about to be me next week. So no, don't get it twisted, man.
Currently me. Really.
Well, like think about it. Would you be better off with a perfect swing and shitty clubs, or amazing clubs with a shitty swing? Like it's like that. So the policy can be structured perfectly, but if you don't know how to use it, it's kind of like a glorified savings account. So that's kind of where me and my team come in. We only do these kind of policies. We use them for everything. I bought my daughter's braces using policies. I bought a wine cellar in my house, landscaping in my backyard, a jet ski, 3 cars, all of my real estate deals. I traveled to Switzerland, to Italy. Like, I've traveled everywhere using these policies. So you need someone that knows how to use them. Our team not only sets them up and makes sure they're done correctly, but then we teach you how to swing the golf club. So that's the thing, man. It's all about how you use it.
With that, do you take, so for example, let's take me as a case study. I have someone that's currently running the show. I think it's done appropriately, right? Do you guys go in and audit people that currently have contracts with other people and say, hey, listen, like, this looks okay, but we should reframe this and kind of rewire the whole show? Do you guys do that as well, or is it from scratch only?
Yep. So you could send me over your policy and I'll be up front. I'll be like, this is amazing. This is great. How are you using it? And then you'll tell me how you're using it. And I'll be like, yeah, keep doing what you're doing. Or I would structure it differently. Here's how, X, Y, Z. Here's why. So you could do this and just show you. And if at the end of the day, you want to end up having me be your financial planner, I hate saying that because, like, I'm not. I just know how to build banking systems and use them. Then we could do a 1035 exchange, like I was telling you.
So, Devin, you just mentioned all these exciting things. I feel like it seems to me, like, just being candid, like, it's almost like, it sounds like it's too good to be true. Like, that's why I want you to walk through the deal, the conceptualization. And I know Rye does it and you do it. So I'm in a room, virtual room full of people that are big advocates. So this is good that it's not like this big sales pitch of all of us talking about it, because I don't have it. And maybe it's something that I need to implement. So you mentioned you bought jet skis and your daughter's braces, or I believe you said your daughter's braces, and all these things. What is an example of how you could fund a deal? Maybe you said you have one that's going to blow our minds, so I'm excited to hear.
All right. So when I first learned about infinite banking, it was, again, March of 2020. I got my first policy May of 2020. And I had a good amount of money that I could put into the policies right away because I was doing real estate. I had capital. So I did 2 policies, one for 125 a year, one for 150. I had access to like 200 and I think 40 grand of what I put in. So I had a real estate deal that came up. It was a mobile home. I was able to buy it for $75,000. It was going to take about 50 grand to renovate it. What I would have done before is I would have got a hard money loan for the $75,000. I would have paid that lender 18% interest. And then I would have borrowed private money to do the $50,000 in renovations. That would have been at 18% interest. So all I did is I looked at this policy I had 200 and something thousand available. If I used it, it was going to keep compounding. So I'm like, all right, how about I just be the lender that I used to borrow from? So I borrowed from my policy and I charged myself the same thing I was paying them, 18%. So my business gets a write-off of that amount because it's a business expense, just like I had before. It's just instead of the lender getting that 18%, I'm getting the 18%. You guys follow me so far? Mm-hmm. So I'm making guaranteed compound interest in the policies. So I'm making money one time, right? I use the money, I buy the property, I do the renovations, I pay myself 18% interest. So now I'm making money twice, right? I took that 18% and I put it into a high yield savings account. It was like 3% at the time. So now I'm making money 3 times. I sold the property to my wife, like I told you guys, once it was all done. And I dictated the purchase price and pulled an extra $40,000 in equity. So I made money 4 times on that deal. Then I rented it out and was getting cash flow. I made money 5 times on that one deal just because I put the money in the policy and used that instead of doing a deal like everyone else does.
Devin, do you really think that it's just a lack of knowledge out there in the space that people don't know about this? Because I'm trying to cut through it. Like, I'm trying to be like, where is the downside? I mean, if people were to ask you that, yeah, I'm curious what you would say, Because it seems like this is a no-brainer, and it may be, but I'm curious, like, what is the something to look out for? What is a situation that you don't want to be in, and how does that maybe affect somebody who's looking to get involved?
So the downsides, there are downsides. First downside, it's life insurance. You have to qualify. Everyone qualifies, right? If you're on your deathbed, you can't get a policy. So not everyone can do it. The second downside is there's a cost to get the death benefit, right? So if you put in 10 grand and you got access to 7, that other 3 grand is for your death benefit. That's a downside. You don't have access to everything, right? But that's very, very short term. Usually by year 3 or year 4, you're putting $1 in, you're taking out more than $1. And then every single year, you put $1 in, you're taking out more than the year before. So there's only 2 downsides. You don't have access to dollar for dollar for the first couple of years, and not everyone qualifies for it. Those are,
I'd say three. The third one is if you don't have someone helping you steer the ship the right way, because then it's just, there's no point at that. You can guess and be like, okay, I think I'm going to accrue X, Y, Z. There's also something that you mentioned, multiple policies, right? Like, when do I open a new one? Is it time for me to, convert some term to whole? Like, there's a lot to it. It sounds awesome, but what you're doing, right? So I think that's important, is like, you have to, if you're interested in this, there's a ton of books out there. There's YouTube University, if you will, right? Podcasts, everything on it. But it really comes down to getting someone in the right seat to help kind of puppeteer this thing for you, because it can get daunting, truly.
Yeah. But honestly, though, it's not that hard. It's very, very simple. It's just such a different way of thinking about money. Like, we have been taught from a very young age to put our money in the bank. We have already gone over. That's not a good place to put money. I think most people understand it's not a great place to put money. We're taught to max out 401ks, right? 401ks are like the worst place you could ever put money, because you're losing access to it when it's worth the most. Like, because of inflation, is money worth more now or when you're 59 and a half?
Clearly now.
Dude, also with that, this is interesting, on the 401k. Ever had anyone liquidate a 401k, pay the fee, and then drop it into a whole policy? Yeah, buddy. Like that. Wow. That's cool.
So really all this is, guys, is just reframing your state of mind to what is the best way or place to put your money in. We've always heard the quotes like, in order to be different, right, or live the life that nobody lives, you have to do things that nobody does, right? And that, it's hard to get out of the security mindset, because I have a 401k, or I have a 401k. I invest in a brokerage account. Like, I'm doing these things. Now, that being said, we have taken risks. We invest in real estate. We have short-term rentals. We're GPs, LPs. So we're doing some risky events there, but there is this condition that we have to invest in a 401k. Take the match. It's free money. And I've said it a number of times, but it's about putting yourself in the right rooms of people that, no, there's a better way to do things. I'm not suggesting that everyone go liquidate their 401k, right? Like, don't take this as, but for some people out there, it might make sense. And I have been, just even listening to you for the last hour, it makes sense to at least have a conversation with you to see what the possibilities are, because it sounds like a better option, especially for an entrepreneurial, what would be non-risk averse, like somebody that is willing to go out there and try to make more income. So anyway, I just wanted to put that thought in there, that there's just so many different ways to expand your horizons on where money should be placed.
Yeah. And Devin, with that, so is that where you got that big lump sum, is when you left Quicken and you take your 401k with them, and that's how you had your money for your real estate? Very cool. That's awesome, dude. What was it? Is it like a 10% fee, or is it way more than that?
Yeah, 10%, and then you got to pay the taxes on it. So I had like 175 in there, and I was left with about 125. So that's what I started that second policy with, 125.
Yep.
Had access to 109, but then what I did is I did a flip. I'm trying to remember exactly. I had 2 policies, one on me, one on my wife. On my wife, it was 150. I had access to about 140. That policy is the one I did that mobile home with. And my policy, I did a flip with. So it was 109. I think I made like a 60 grand return on that flip. So think about that. Like, within 4 or 5 months, I made back what I lost in the penalty by pulling the 401k
Sure.
and the taxes. And now I've got control of the money for the rest of my life. Instead of in a 401k, I've got no control until I'm 60 years old. Makes no sense.
Yeah. No, I think thanks for sharing that. And I think it's cool. To Corey's point, it's not for everyone because some people are not entrepreneurs and they're not going to invest in other things and make their money grow, right? They like the security and they're just going to ride with that. But there are a few that will be hearing this and the light bulb's going to go off and they're like, all right, I need to move. So we'll make sure to send people your way. As we wrap up the episode, we'll get all the contact information and links and things like that. But we kind of want to wind down the show.
We should just go to the last drop. This is the last question of the show, Devin, and it's our favorite question. Devin, you've done a lot in a short amount of time. You mentioned your mid to late 30s. You left the corporate America. You kind of went against the grain. You bought real estate. You're in this infinite banking space. I'm curious, like, what do you do it all for? I know you mentioned that you are starting a family. Like, what is your overarching why, and what gets you out of bed every morning to do what you do?
Man, I love this question. I started thinking about this recently, and it was because I started making a good amount of money, like over 6 figures a month, right? And I'm like, it doesn't feel like anything, like I've accomplished anything. I always thought if I become a millionaire, I'm going to be so rich and life's going to be perfect. And I became a millionaire at the end of 2020, and I'm like, doesn't feel any different. So then I made a new goal, like, all right, I'm going to make $100,000 in a month. I started making that every single month. And I'm like, doesn't feel any different. I can go eat nicer steaks and drive nicer cars, but like, there's got to be more. So I really started digging into my why. And I realized that I want to change the world from a standpoint of education. I want to be the kind of person that you look back, and this might not happen in my lifetime, it might be in my daughter's, but that I change the world from an educational standpoint, meaning right now, schools don't teach anything about finances. They don't teach anything about credit. They don't teach anything about what an asset is, what a liability is, how to balance a P&L, nothing. The things that should be taught in school aren't taught. So I want to change that. The only way for me to be able to change the schooling system, I got to be moving and shaking with like billionaires. So that's what kind of drives me, is like really get to the point where I'm a billionaire, where I can start influencing how the schooling system is actually set up and what's taught in schools. I don't want, like, my daughter knew nothing about this stuff until I started teaching her. It should be like that.
Devin, I think that's commendable because a lot of people get caught up in their own world and what they're doing, and maybe don't think about the outside of it. And Ryan and I are in a place that you were several years ago, where we're about to become millionaires very soon. And I thought about this too. I'm like, it kind of takes you getting to that point, or even on the way to realize it, because you do think that when you get to that certain point that a lot is going to change, and your lifestyle can. But at the end of the day, like, if you're not happy or fulfilled or have purpose, it really doesn't change too much. And it's kind of sad because people spend a lot of time and effort getting to that place or trying to get to that place and thinking there's this proverbial mountain that you have to climb. But we've always talked about on the show that there's going to be another one. And it really is about like how you spend your time and what you do and the impact you make on others. And again, we've said it a number of times, but I think it's important to bring up in this scenario because you don't want to be a billionaire so that you can have 8 Lamborghinis. Like, it doesn't, you can only do so much for yourself with the money, right? It's about impacting people around you. And at the end of the day, we're talking about life insurance here. We're all going to pass away. So it's like, if the impact that you have on others isn't the most important thing at the forefront, I'm not sure what else really could be. It's like, okay, so you pass $40 million onto your wife or your kids. It's like, are they going to have purpose? Are they going to even have the drive to do anything? So we've talked to a number of people who are in your position. You're one of the wealthier people that we've talked to, but we've talked to guys like Brandon Turner who are on their way to $1 billion. And he said the hardest thing for him is figuring out what he's going to teach his kids so that they're not spoiled like rotten kids, right? So I love the conversation. I just wanted to put a little anecdote there that some people need to get to a certain place to realize it, but along the way, if you can remind yourself that it is about the impact, I think that keeps us going for sure.
Dude,
So
you hit it right on the head. The biggest thing is helping other people. If you're not helping other people, like, what are you doing? So I realized that the more I helped other people, the more successful I became. So I learned about infinite banking, and I was telling my friends, my family, neighbors. I was literally telling everybody. I told someone at the checkout line at a supermarket. I'm telling everyone in my immediate vicinity, basically. I think that's how you say that word. Vicinity? I don't know.
Yeah, you got it. Yeah.
I barely graduated high school, so it is what it is. So like, as I was teaching everyone around me, nothing really changed. I wasn't making more money. I was still making good money. I'd become a millionaire, but I wasn't crushing it yet. The second I got onto, it was TikTok. It was December of 2020, and I put some videos out about infinite banking. One of them, it was like my third or fourth video, and I put it up, went to bed, woke up the next morning, 17,000 followers, like that. And I was like, oh, I just need to make more videos like that. And then everyone started asking me how to do it. Then once I started actually helping a lot more people, within a month, I had like 150,000 followers. As I started helping more people, that's when my income just blew up. It came from helping more people. So it's like, as long as you have that in your mindset, like, I'm going to help more people, and by me helping them, I will get what I want, which is more freedom, more income, more experiences. But it all comes from first serving other humans. That's it.
love it. Devin, it's been a pleasure, man. It's really cool to get to know you, your story. You have a unique one, and we're glad to share it with our audience. If people are interested in learning more about you, again, your story, or the concept of infinite banking, maybe working with you on it, what's the best way for those people to get in touch with you to go down the path?
So the only way to work with me and my team is you have to watch a training video, because infinite banking, you guys are hearing this. It's like this concept that just seems crazy and too good to be true and all that. I have a video where I've simplified everything. It's an hour long. So you have to watch that video. It gives examples. It shows numbers. It really dumbs it down. So it's really, really easy to understand. Once you watch that video, you'll have a link to schedule a call with me or someone on my team. Most likely someone on my team. I just take overflow calls usually. But everyone on my team has policies. They use policies. They understand how to structure them. And nobody on the team will ever sell you. We do not sell policies. We teach the concept, and you'll end up wanting to do a policy. So just go to the link in my bio on Instagram, TikTok, YouTube, and watch that video, and we'll help you out.
What's your Instagram handle, just again, for people that don't know it? I know you have Mr. Burr, right? Is it Mr._Burr?
Yep, Mr._Burr, Burr with 4 R's.
Very cool. We'll make sure to add that video link to our show notes too, so people, don't have to go through the hoops, and obviously they'll follow you on social, but we'll have it directly if you are on your Spotify or your Apple Podcast app. So, Devin, it was a pleasure, man. This has definitely been one of my favorite shows and interviews to date. You dropped a wealth of knowledge, lots of bombs, and we appreciate you, man. Thanks so much.
Appreciate you guys. Thanks for having me.
Thanks for tuning in this week to the Weekly Juice Podcast. If you liked what you heard, please leave us a 5-star review on Apple Podcasts, subscribe, and share with friends. The more ratings we get, the more ears we'll get on our show, and in turn, we'll be able to provide you with more high-quality guests. You can also find us on Instagram at Weekly Juice Pod, where we post daily tips and tricks and document our own journey towards financial freedom. Make sure to tune in every Wednesday to get your weekly juice.